Welcome to
I've lost you again.
2026 at 3:03 p.m.
No, I didn't
As
hear you.
always, we
You got to say
as
it again.
always everybody heard me, you just didn't. I'm not saying
No, it
because you're not
didn't.
going to
The
edit it out.
last
Everybody heard
episode
me.
too.
Everybody heard me last time.
No, they didn't. I couldn't. I listened to the podcast. You were blank.
Okay, all right, here we go. Start over. No edit. I'm sure there's going to be no edit.
I'm already
welcome everybody.
exhausted.
Welcome everybody to the Chinchilla Pickin' Podcast. It is January 11th, 2026 at 3:03 p.m. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and I'm joined by the one and only Baron of Bonds himself, Brandon Beaver. Brandon, how are you?
I already need a nap. We're only 20 seconds into this.
You're already worn out. We are so. What I always say on the show is rules, rules, rules. Brandon and I get together 5 to 10 minutes before the show, and we tell each other what we're going to talk about. Well, we already started bickering right before the show started. We were already bickering at each other, and I was like, you know what? Let's just stop. Let's save it for the show. We're already bickering. Let's have the listeners hear us bicker about this because I think it'll be better for you guys if you hear the actual bickering of us back and forth on these things versus him and I just bicker behind the scenes. You want to hear it. That's what
Right.
they want to hear.
I agree.
So let's give it to them. But anyways, before we get to that, we have. I mean, we have get what's happened the last week. What's going on, Brandon? What's going on?
I'm getting better. That's a good thing. I've got
Are
an
you?
epidural scheduled for the 19th, which is perfect. I don't have to take any time off of work. It's Martin Luther King Day. I'll be off already. I'm going to go there and get that done, and hopefully this neck issue continues to keep getting better, and I don't need surgery.
Nice. I hope that as well, buddy. I hope that as well.
Thank you.
I tell you what, I got back into the gym and started weightlifting again for the first time in almost 2 weeks. I had a shoulder injury that I had to sit out for weightlifting, and so I was back in it first time today. Felt great. Um, did a run as well, so back almost back to normal. Be layering my boxing back again in another week, and yeah, it's gonna be good times.
You know what else I did?
What's that?
I bought more Netflix. This is what we were bickering about.
Let's just get into it then. Let's get into this.
I didn't. I
No, no,
don't
no,
have
no.
any data.
I want to lay the background for our listeners. Here's the background. We started talking about the Netflix, and then we went into HBO Max, Warner Brothers, and that deal was going through. And I mentioned that I would be happy if when Paramount gets to close on this deal because Paramount has UFC, and if they get this, it's going to be great for consumers. And Brandon jumped in with, go ahead, Brandon. This is where you jumped in. So
No,
let's go ahead.
I said we need to stay consistent and be, consistent with our free market principles. Warner Brothers does not want the deal with Paramount. I don't want a legislatively forced deal that Warner Brothers doesn't even want to do.
I agree with that point. All I'm saying is it would be better for the consumers and what we have as far as like what's the word I'm looking for? Streaming things to watch while you're streaming with it. What is it? There's a word I'm looking for. Anyways, it'd be better for us as consumers if Paramount actually got Warner Brothers. Because then
Okay.
Paramount would have got UFC and Warner Brothers, and Paramount would now be a huge player in competition with Netflix. But now Netflix, if they get this deal, which it looks like they are, but Paramount's still fighting for it. But it looks like Netflix is going to get the deal. Netflix just stays the leader in charge of all streaming services, which is great for Netflix. But they're going to stay in front now, and they're just head and shoulders above anybody else. Head and shoulders above
I'm
it.
all for the consolidation in this industry, though. My head spins with all the different streaming apps that you have now. I know there's different, there's different choices. That's all great and everything, but the problem that I have with it is then, for example, I'll give you a good example. Like some of South Park is on Paramount, some of it is on a different streaming service, and now you got to buy two different streaming services if you want South Park. And then beyond that, there's also some things on Prime, and then I got to buy Prime, and now I got to have Netflix and Prime and Paramount and uh, Peacock and whatever else is a Disney Plus, and I'm getting so tired of it. I just want the consolidation. I will pay a lot more per month just to have one program, one streaming service. I'm willing to go back to just like, we all cord cutted and stuff like that in order to save money. I'll pay $120, $130 a month for one streaming service that gets it all and be totally happy with it.
Yeah, but see, here's the thing: is that you are going to have one, but it's now going to be Netflix versus Disney versus Apple because they're going to consolidate the whole industry into those three, and they're going to control it all, and it's going to be an oligarchy.
Yeah. Well, then you got Prime that is like,
Oh
you
yeah, I
can
forgot about
bundle
Prime.
all of the different so like they've got Peacock and Paramount and everything on there. You can go through them and have it all
Yeah,
in the
but you have to
same app. But
purchase. You have to purchase
yeah,
that through them.
you do.
Nobody want. Yeah, I mean that's just more purchasing. Like I don't want to purchase that through Prime.
But the point about Netflix, though, the whole reason why the selling pressure here picked up was because of the Warner Brothers deal. And so I think the Warner Brothers deal goes through, the stock goes up because that adds more, and that's a good deal, I think, for
I
Netflix
think
over
it
the
keeps
long
them
haul.
solidly in first place for a
It
longer
does.
time.
It
A
does.
longer time, much longer time.
If the deal does not go through, then people are going to buy back into it because that short term selling pressure is not going to exist anymore. I
Now,
think
and
it's
I,
win-win.
I personally, for the sake of the consumers, not for capitalism or non-cap or whatever, but for consumers, I want to see um, Paramount get Warner Brothers. But you're right. If I'm going to stay true to my roots of being a capitalist, Netflix is paying what Warner Brothers wants. So
Yeah, that's
yeah,
my position. So,
yeah.
all right, we're not even planning on that.
We weren't. Neither of us was planning to talk about this whole deal. But you're right. Netflix is a winner no matter what. Goes through, doesn't go through. Netflix stock goes up. Netflix is a winner if it goes through because it solidly leaves them in first place. Paramount is a seller if it doesn't go through because now they really have a weaker standpoint against
Right.
everybody else. They did buy UFC, which is great for them, but
Yeah.
I don't know how many more subscribers that's going to add to them until we see the numbers from Q1. Because Q1's the first. This January 1st was the first time that UFC switched over, and we don't know if that's gonna how many more consumers that's gonna add to their subscriber base or not.
I was happy about the UFC deal because, to be honest with you, I haven't watched much UFC in recent years. I already had Paramount for South Park and a few other options that are on there. And then
Right.
now I'm getting UFC also. So I'm kind of going back through and getting caught up on my UFC. So that's
I tell you what.
cool with that.
Right now with everybody in the boxing, saying I'm gonna do boxing or I'm gonna do UFC or something else. Well they've been saying that all these celebrities have been doing it for a few years now. I'll tell you what, Brandon. I box. I do mixed martial arts. Let me challenge a fellow financial investment podcaster, and we could do like a three-man fight. There we go.
Doesn't
Sanctioned
your
fight
daughter do
between me and someone else.
jujitsu? Doesn't
Huh?
Layla do jujitsu?
Uh, she. So he's talking about my daughter.
Yeah.
She did boxing and taekwondo.
Okay.
Boxing and
I did
taekwondo.
taekwondo growing up.
Huh?
I did taekwondo growing up. I got
Yeah,
to
that's
red
what she
belt.
did. She did it growing up. She was the AMAA regional champ and another. There's a number of different federations, so many different federations, but
Nice.
she was a number of other federations, regional champs as well. But she only did it for a few years. She really liked boxing. That was something she really stuck with for a while and did a little bit in college.
Yeah, taekwondo is defensive. It's very much, you're not gonna
It's
start a fight with
flashy
taekwondo.
kicks. It's
It,
flashy kicks is all it is.
with that, but it's mostly defensive. Like somebody attacks you, and then you know how to defend yourself rather than you fighting professionally. I mean, and that's why you don't see taekwondo much in UFC or at all, hardly even because
I,
it's
I've
not
I've seen
designed
an
for.
axe kick thrown in UFC before. It's rare. It's extremely rare, but I've seen it.
Yeah,
Seen
yeah.
it thrown. I tell you what, though, there are people who fight defensively. They're called counterpunchers or counterattackers, and they wait for you to make a move, and they kind of bait you into making a move. They'll stick their head out, they'll lean, like, "Come on, hit me." They wait for you to make the move, and they counter it because that's their fighting style. So there is a lot of that out there. But anyways, we didn't come here to talk about fighting. If you do want to know about, you want to know why I know how to fight. You can always DM us on the side, Chinchilla Picking. We are everywhere. Chinchilla Picking Podcast, TikTok, Instagram. Brandon's on Stock Twits, causing havoc. He's on Threads and X, causing havoc. Follow him. Um, But yeah, let's get into it. Brandon, you said you were going to take it away. I already did the rules. You said you were going to take it
Yeah.
away.
Well, I got a deep dive on Vistra. Do you know by me mentioning the name of the company why I'm going to tell you to buy this stock, Dave? I'm just curious.
Never heard of this company before. What is it?
Okay. All
Vistra?
right. Vistra. Yeah. It's an
Okay.
energy company.
Should I get my notepad out? Let's take some notes.
Well, it was traditionally a utility company, but they've recently transitioned into what I call, and what other people are calling too, a growth utility engine here. Um, so you're not going to see Vistra, the name of the company, on the bill. It's a utility company, but they kind of are in different names here. So depending on where you're at, you're seeing on your bill TXU Energy, Ambit Energy, Dine Energy, Energy Harbor, or Home Field Energy. Those are the ones. And the Energy Harbor here is the one that I'm going to focus specifically into because that's the nuclear power generation business that they just purchased that has made them take off. Um, so they recently bought Energy Harbor. This is a large fleet of nuclear power plants. And this is creating massive amounts of power 24/7 without creating carbon, which is huge for the tech industry. That's what Meta, Google, Amazon, that's what they all want.
So, question: they bought some nuclear power plants, and they're not building any.
No, well, they're going to build more. They're
Okay.
getting better deals and stuff like that out of this. But so most normal utility companies, like your local electric providers, most of them, like Duke Energy, for example, are regulated. The government sets the price they can charge that caps their profits. Vistra largely operates as an independent power producer. In this more modern model, these functions are unbundled and they focus exclusively on the generation side of the business that sells to companies like Duke Energy when they need it. This allows them to remain unregulated and their prices get to stay uncapped. They construct and own their own power plants, their solar farms, wind turbines, gas plants, etc., mostly natural gas now. They produce the electricity and then they sell that electricity in bulk to public utilities. So
Okay.
that's how they're
So
doing this.
I see a lot more growth in natural gas, a lot more growth in natural gas over the last decade, 10 years. And Plug Power, I thought was going to be a great company to buy back in the day. And it did. It jumped up over 10 times in stock value and then it fell right back down. I don't know what happened to it. Occidental rose a little bit during that time. They're another big natural gas player. And what is the other one? There's another one on the East Coast, and it's something energy. Ah, man, if you're listening right now, I apologize. I just did a 3.5 mile run, literally walked in the house and sat down and started this podcast. So my brain is not quite. You would think the run would help me out, but severe ADHD, it's not. It might be Diamondback Energy I'm thinking of. That also does a lot of natural gas. And
Right.
I haven't seen the growth in these, even though I see more and more natural gas power plants.
Okay.
And it's making me wonder, where are they buying their natural gas from? Where, I mean, what's going on? Because these natural gas companies aren't rising. And here's yet another company, yet another one that you're mentioning, Vistra, that is using natural gas plants. And
Right.
it's where are they getting it from? Because the companies I watch, none of them are really jumping. I mean, they're growing.
Right. I don't know that part. I don't know who their supplier of this is, but I can tell you right now that they have the major areas that they're operating. ERCOT, which is the Electric Reliability Council of Texas, that's in Texas. And they're in the Mid Atlantic and Midwest, and they're in New England. That's their major markets. And they've got kind of a counter cyclical hedge here because they're doing both. They're selling the natural gas and the energy, and um, they're also selling the other end of it to people who own the homes and stuff like that as well. You know, like people like me and you. And that's a counter cyclical hedge.
It's
And
you and
that's
I,
because,
proper English. You and I. It's the King's English, man.
okay. So that's the hedge because when we got a high price environment on energy, wholesale power prices spike. The generation business gets more windfall profits and higher than normal profits, right? But it puts compression kind of on the retail portion that they have. When the natural gas prices and energy prices and stuff plummet, they're still able to charge stable prices to consumers, and that's kind of their hedge there, and that protects the margin in the business and keeps it, less volatile, so to speak.
Gotcha.
So that's their business plan there. Here is where Vista Corp excels and why they're widely regarded now in the analyst community as a holding for AI infrastructure, and people are now saying buy this stock, and some are giving it strong buy ratings, right? We know that the grid is congested. We know all the data centers and stuff like that are needed for this artificial intelligence revolution that's happening. We know that the grid is congested and that it can't handle all of it.
Yeah.
Vistra is actively negotiating what they call behind the meter deals, where these data centers are built directly on the site of Vistra's nuclear or gas plants, completely circumventing the grid altogether.
Okay.
You following me on this?
So far?
Okay. So that's their big that is their big what do you call it? That's their moat, so to speak. That's their advantage. We can build these data centers right where these power plants are, and you don't have to congest the grid. You don't have to increase the power prices for the community. We got a data center that's going to be built right next to my house here in Trenton, Ohio, and everybody's up in arms because it's going to increase the pressure on the grid and raise electric prices for the community. This way, we don't have to worry about that.
Isn't that what GE Vernova was doing with their tiny micro nuclear plants that they were going to build alongside data centers?
I maybe
that was GE Vernova's stick, and now you're saying it's Vista's stick.
Vistra's doing it too.
Yeah, but is Vista signing any deals? Because here's my only question.
Yeah, they have a deal, and I'm going to get to that.
Okay, good. Because my question was like, if they haven't signed any deals, GE Vernova has signed deals and has contracts already in place. So if Vistra hasn't signed deals, then they're against heavy competition.
But here's I'm going to get to the deal because this is going to be a major thing financially.
Okay.
And you may even wind up buying the stock tomorrow morning over it. We'll see.
Nice.
Okay. But here's the thing.
Option place.
Now, why am I saying this is a buy? I'm going to get to the big reason here in a minute. Why do I keep raising my hand here on the video?
You got to learn you got to set that thing off so it doesn't register your hand signature.
If you look at the stock right now, you pull it up on Robinhood, Schwab, whatever you're looking at, you're going to see a price to earnings ratio of 54 times, which seems very high.
Ooh, yeah.
Forward PE for 2026, looking at that, it's 24 times, which that makes sense that we're, not going to pay for forward growth that hasn't happened yet. That's, not as much as we're paying for the past, at least, right? So that always makes sense when you see the forward PE is lower than the trailing PE. That makes sense. Look at the PEG ratio now. And it's mostly because of one deal that just happened. But if you look at the price to earnings growth ratio now for the next 12 months, it's 0.32. Because the growth is far outshining what the price to earnings ratio is now. So 32 cents is what you're paying for the forward growth. That's a good deal, in my opinion.
That's a very good deal. I'm just sitting here like thinking about everything you're laying out here. Who's they have the contracts with?
I'm gonna get to it.
That's what I want to know.
Let's look at the total debt load, $17.2 billion. That kind of sucks. That's very high.
That's a heavy debt.
They were a junk bond. They were junk rating. And then just recently in December, they got raised to investment grade because now they got free cash flow enough to way more than cover their interest payments.
You know what's funny is that Buffett would have bought them if they were a junk bond company back in the 50s when he first started stock trading.
Yeah, he probably would have. So just about a week ago, they announced a deal with none other than, surprise, Meta Platforms. This is a 20-year landmark agreement that effectively changed how Wall Street viewed Vistra's future. Meta has agreed to pay for over 2,600 megawatts of nuclear power from Vistra over the course of the next 20 years. The total amount of the deal is not public, unfortunately, but analysts are estimating that they're paying to $120 per megawatt hour. That translates on the low end to about a $45 billion deal.
A year?
No, this is for all 20 years.
All
But
tw- so
but but look at go ahead, pull up Vistra on Robinhood. Look at the market cap of the stock.
all right. Hold on. Hold on.
While you're doing that, I will say that this is a 20-year contract. This is enough power to power about 2 million homes, just to put that into perspective.
Vistra. All right. So 167. It jumped 10% on Friday,
It
by the way.
did. Look at that market cap right now. Look what the market is currently valuing Vistra. 56.38 million,
Yeah,
if I remember correctly.
56.38.
This one deal on the low end is $45 million. If you go to the high end, and if they're buying it for $120 per megawatt hour, that is actually more than the current market cap of the stock. One deal alone.
Man.
That's why I'm saying this is a buy. That's why I say it's a good value.
Yeah, but we don't know the details. We're estimating based off what we do know the meta deal, which is good. It's a good estimate, and
Yeah.
then you combine it with what they already have, you would probably be pretty accurate.
Yeah, I would think so too. Unfortunately we may never know the deals. I mean, this is going to take analysts digging through reports and such and trying to estimate it based off of financials. But I honestly think that alone makes this a buy at current
Gotcha.
levels.
At current levels.
Yes.
Okay.
They're using their existing fleet, by the way. So they're not building new plants for this. They're using the existing fleet that they obtained from that Energy Harbor deal, I mean. And this is going to be power from Beaver Valley in Pennsylvania, Davis-Besse in Ohio, Perry in Ohio, and Meta is going to get carbon-free power that runs 24/7. Vistra is going to get a deal that is about 2/3 of their current valuation. So maybe more. Good deal. Good deal for both.
Yeah. Very good deal.
I got to call it a buy.
All right. Cool. I like it. I might actually, you're right. I might actually dip my toe in that.
Yeah.
Start a
Watch the
position.
depth levels, but I mean, it was down. Honestly, it was just back into late last year that the S&P Global was saying that it was junk status, and then they just changed it to December. They went from GAAP operating losses to profits. I always love that. Price earnings ratios usually are way more elevated than even what the 50 some odd is that I just mentioned already. Usually,
Yeah.
if you see a company transition from losing money to profitability, the price earnings ratio is like in the 300 range. So not bad. I think we got a good deal here.
Yeah, and you know what's funny is I listen to a lot of new retail traders, like first time ever investing, and I try to work with them and get them to another level to where they can read books and understand things on their own. They would look at Vistra stock and be like, "Oh, $167 a share. That's expensive." And I'm like, "It's
Right.
not. You're looking at things wrong. You're looking
Right.
at things way wrong." Vista is very cheap versus that $10 stock that's going to go down to $7 a share. You lost
Right.
30%. Vistra is going to jump up to like $1,000 a share. Because at one point in time on the show, we called Nvidia buy at 100 some odd dollars a share. It went up over 1,000, then did a stock split.
Right.
You know, and we did the same thing with Tesla, and we've done the same thing with Meta. Meta hasn't done a stock split, but we've done all the years. It's like yeah, you got to view and analyze these stocks correctly. And I like what you're saying as far as Visha, and I like that they did a deal with Meta. That's a positive
Right.
sign.
Right. I like it too. We'll see where it goes, but I'm calling it a buy. I got through
Buy
that a
from
lot
Brandon.
faster than I would, Dave. A lot faster than I thought that I would.
That's okay.
You want to
That's
go into
okay.
yours? I mean,
Yeah, I got a lot of
okay.
stuff here, buddy. I got a lot of stuff.
Go.
All right, so I got two. Remind you, I got two drugs that I want to briefly. I'm just gonna highlight, if you will, these two drugs from pharmaceutical drugs. First one is from Pfizer, and it's one that works with chemotherapy, and if you have even a liver that's metastatic liver. So if I say a lot of it's because I'm really jumping out of my area of expertise here and trying to pronounce all these scientific medical words and trying to explain things that I'm not 100% positive on myself. So that's why you might hear a little bit more of that out of me right now. But there's a reason why I'm going into this. So, first one is Pfizer's, and the drug is Braftovi. That's Braftovi. Pfizer's Braftovi. It's in a regimen you use in addition with chemotherapy and others for basically colon cancer is what it's used for, and it's used to help improve and make you last longer with severe bouts of this.
Okay.
And if you go into, there was the article came out today on the Business Wire, came out actually yesterday, came out Saturday on January 10th at 10 a.m. And the headline reads Pfizer's Braftovi regimen with additional chemotherapy backbone increased response rates for certain patients with metastatic colorectal cancer, right? You might be like, okay, this sounds like a very specific drug and a very specific disease, and is it really going to make that much money? Well, if you read through here, it goes in all what it's going to do and everything else, and all the good positive results they're seeing. And you start learning more terms as you read this article. You'll learn more terms. So if you read it 2 3 times, if you're not that smart with medical terminology, like I wasn't at one point in time, you have to read it 3 times in order to really understand it. However, it's a very good article. It does talk about this. Colorectal cancer is the third most common type of cancer in the world. It has approximately 1.8 million new diagnoses, and that was just in 2022. It's the second leading cause of cancer-related deaths. The lifetime risk of developing CRC is 1 in 24 for men and 1 in 26 for women. In the U.S. alone, estimated 154,270 people will be diagnosed with cancer of the colon or rectum in 2025. That was the estimate then. And approximately in the United States, 53,000 die each year from this. Wow. So it affects a ton of people, right?
Right.
So again, we're looking at this from an investment standpoint. Well, there's another article that came out yesterday at 10 a.m. on the PR Newswire. And kind of coincidence, they both came out at the exact same time. You're going to see where I'm going with this, Brandon, here in a minute. It's going to take me a few minutes to get there, but I'm going to wrap it up with a bow tie when I'm nice and done here. So this one, the headline reads, Rybrevant, that's Rybrevant, Rybrevant, longer-term results show promising and durable responses in difficult-to-treat colorectal cancer. This one's from Johnson & Johnson now. Again, it's talking about treating colorectal cancer. And if you read through the article, it talks about the great results it's having. And again, this is going to work in addition with chemotherapy. And again, this is showing great results in addition to chemotherapy and, good results with metastatic liver, people with metastatic liver problems, right? Or have a history of it. So it's working well with them. So we have 2 drugs, 2 different companies doing very similar things. The reason why I'm bringing this up is the last time we saw 2 companies doing 2 different drugs, doing 2 different things around the same type of thing, seeing great results in a newer way, and they're using it in a combination with a drug that's already out on market. We saw a huge jump in blood cancer treatments and in helping people who were diagnosed with like stage 4 blood cancer, and they were able to actually cure, if not treat, and give longer life to them. And it created hundreds of billions of dollars for AstraZeneca and other companies along the way. It delivered huge results. The last time I saw something similar to what we're seeing here. What usually this means is that there was a group of scientists. This is just, again, I'm going to say right now, I'm going to preface this by saying this. I am guessing. I have no evidence to back this up. This is me guessing based off what I have seen in the past and past history and books I have read on true accounts and articles I've read on true accounts and interviews I have seen on true accounts. What I'm guessing is there was a group of scientists that came up with a certain way to treat maybe a certain inhibitor or a certain K factor of a protein or a certain part of this type of colorectal cancer. And the scientists were either a split or they there was two different approaches to it, and one scientist took to one company, one scientist took to another company, and they all started at the same time and they're racing each other in competition to try to get their drug out first. But it's basically the same school of thought. They either all went to the same group, the same class. They all know each other, is what I'm saying. And they all work together. And now they're in competing companies trying to go ahead and push this out. And they both headlines got released at the exact same time on the exact same day about their exact same progress of where they're at, which is very, very coincidental to me, if nothing else. But it tells me that there is a breakthrough coming in this. Now, I say that I have not done the deep dive research into know which one is closer to it. And that would be a key factor is
Right.
not necessarily who gets the market first. If one is extraordinarily better, it doesn't matter if the other one got there first because this better one's going to take over and that's what people are going to use. But one of these is going to get they're both moving into stage three testing now. So that means after another year, they're going to jump from stage three into boom um, cells, and they're going to jump, and it could be hundreds of billions of dollars for whichever company is able to bring it to market first. It's going to be a huge push. I'm saying this is something to watch. Read the articles, look up the drugs, see where they're at in their trials. Who is actually having better success? Right now, it's about even. The metastatic liver part is a big portion of this. Also, one thing I know from investing in pharmaceutical companies who are in the process of trying to bring a drug to market is sometimes they bring a drug to market in something that is not the strongest part of what that drug can do. But once you get it FDA approved for, let's say, disease A, you can then use it for disease B as a like a sister treatment or a side treatment. I forget the exact medical term for it, but there's a medical term for it. It's how they found about weight loss when they were treating
Right. The
diabetes.
GLP
It was
ones.
you can use this also for this and this and this, right? So they're trying to get it to market for this disease, which will probably be the easiest route for them. But then they're going to branch off and use it for all these other ones. Could be the end game goal here as well with these drugs. And the fact that we have two companies pushing the same type of approach tells me they found something. They found something and they're both trying to hurry up and get it to market in what they feel like is the best approach to get it to market. But there's probably going to be other uses for this drug once they get it to market and FDA approved for that first use. Now, I know I just talked a lot, and Brandon, I'm sure you have some thoughts and questions. Hit me with them.
Well, we just don't know who the winner's going to be yet.
Not yet.
But
I haven't done my research. I just found these today. I have not done any deep dive research yet. But this is my process. This is okay. I found these.
right.
This is my history. This is what I know about pharmaceutical companies who bring these type of drugs to market. This is what this is telling me is that they found something that works, and they're both pushing this, and it works pretty similar to each other. It tells me it's probably from the same group of scientists. And so they're trying to hurry up and get this to market in these ways. I bet you there's going to be all these other uses for it once they do. I would love to know where each one's at. This is good news for Pfizer because they've had a bad run of luck lately with drugs and getting drugs bought to market and buying drug companies. They've had a bad run of luck. They could use some good news there.
Yeah. Well, I mean, with the aging population in the United States, we're going to see higher rates of cancer because that's how that works, unfortunately. Recently just saw a study that shows that 80% of men, autopsies show this, by the way, 80% of men that live past the age of 80 have some form of prostate cancer. 80%.
Really?
Right. Most are
Wow.
able to live with it symptom free, which is also something that, like, previously was not known that could even happen. But yeah, 80% of men over the age of 80, when they die, the autopsy reveals some form of prostate cancer.
Crazy.
I know.
Huh.
So we'll probably see more of those kind of studies. I don't think it'll be that high with colon cancer or blood cancer or anything like that. I know somebody that was diagnosed with blood cancer a few years ago and living a healthy lifestyle and doing the treatments that were prescribed has worked very well for him, thankfully, for him and his
Right.
family. But yeah, we're going to see more and more, I think, cancer, age related cancer issues as we
Well,
go
hopefully we
forward, which
see
is,
we see more ability to fix, stop, cure maybe some of these
well, I think that's what
here
these
soon.
companies are seeing. I think they're seeing that if it's already happening now, but I think they're also seeing that this is going to continue to happen, which is why a lot of these drug companies are putting large amounts of capital and resources into cancer research,
Oh,
into treating
it
it.
takes billions. It takes billions to
Yeah,
get a drug to market from zero to market. Billions and years. It takes
right,
years.
right.
Yeah, it's crazy, but it's also good to know that they're pushing and they're trying and there is movement in these pipelines here.
Mhm.
So yeah, I'm not a buyer of each right now, but I am watching both.
Okay.
And I'm gonna find out which one is further along and probably got the best chance, if you will, to go ahead and move forward with this. I do want to talk briefly about. Let's switch gears. Unless you have any other questions about pharmaceuticals or these
Nope.
two drugs.
All good.
All right, we're gonna switch gears here for a second. We're gonna talk about Walmart going to be able to use Google's artificial intelligence assistant Gemini to more easily discover and buy products from the retail giant and its warehouse club, Sam's Club. So this is a new move from incoming Walmart CEO John Furner and Google CEO Sundar Pichai, I forget how to pronounce his last name. They announced this. They said the company's going to team up. They're going to work together. They announced this at the National Retail Federation Big Show. This is a huge announcement for both companies. Google's Gemini, the version 3 came out, has really turned heads. Everybody loves it. Such a huge big deal. And the fact that Walmart's the first big client to score a deal with them is also massive for Walmart as well. So I think Walmart could really capitalize off this. I like the new Gemini.
Me
I,
too.
for one, and no longer invested in Google. I did sell out during that. I wish I didn't now, looking back. And this is why. So, side note, side discussion, real quick. I mean, first of all, I think this is a buy for Walmart. Not, I mean, if you already own Google, you own it. Don't you no need to buy any more right now. Google gapped up.
Right.
Buy for Walmart off this news. Right, done.
Right.
All right.
I loaded
Side
up on
note,
Google. I
huh?
loaded up on Google last year, and
Yeah.
it's weird because like oftentimes your best performing stocks are not like what you would expect. So Google was one of mine, but the best performing stock I had was General Electric, 89%.
So I loaded up on Google as well, and I told everybody on this podcast when I did, and it wasn't last year. It was in the fall of 24 is when I loaded up on Google, and that was a great time for me to load up on Google. I bought a few thousand shares of it. It was great. Now the thing is, I sold, and it was a very emotional time for me. I had a family member pass, I had a lot of emotional things going on, and I made some emotional decisions regarding my finances. And the reason why I'm talking about this, because I don't bring up my personal stuff on this podcast, but the reason why I'm talking about this is use an example for you guys as listeners. Not a good time to make financial
It is
decisions when
not.
you're
No, turn your
emotional.
phone off.
That's
Don't even
not a
look.
good time.
Yeah, I mean, if you're doing trades, intraday trades and swing trades and stuff, you have to. But if you're buying for long term, like I am, sometimes it's even better to take time to make
Yeah.
decisions. And yeah,
So I liquidated a number of positions that I was up in all of them. I was profitable in them. I was up a lot. I
that's
was in
good.
Google. I had over doubled my money. It was great, right? So it's not like I sold at losses on any of it. The only one I was down on, I still own, and I'm still down on it, by the way, which is Lens Therapeutics. It's killing me. But besides that, I was up on all of them, so I took profits. I cashed out, liquidated a lot of them, kept my dividend stocks, and it was just because I was in a period where I didn't know what I wanted to do, and I was feeling this sense of the whole we're all going to go someday. Why not live today? YOLO, you only live once type
Yeah.
of and feeling at that time. And I made emotional decisions that came to my finances. And I look back and I wish I held some of those long-term investments, such as Google and others that I had held for a long time. GE Vernova. GE Vernova went up $100 a share after I sold. Google went up another 40, $50 a share after I sold. I lost out on a lot of money. And when you look at Google, and it going up 30, 40, $50 a share, you got to remember how many shares I owned. And you could do the math of how much I lost out on
Yeah.
there. And
Yeah.
it adds up.
It's
It adds up
opportunity
quickly.
cost.
Yeah.
At least you still made money in the long run.
I did. I made a good amount of return off it. I was very happy with it. And so, I have that. I'm now sitting on that cash position. So now I'm looking at companies like Vista, like, hey, I have cash. I could create
Right.
a position now.
Yeah.
So
VST is the sticker, the ticker.
Yeah,
I said sticker.
VST is the ticker. If you want to know about my option strategy that helped me make 189% in the last 6 weeks of last year, I'm probably just going to write a book about it at this point. But DM us. I'm not going to tell you guys unless you DM us. Some of you, I mean, somebody's got to DM us for me to talk about it on this podcast. I'm not doing it until somebody DMs us. I'm pretty sure Mike is going to be the one who does it. He's a guy who Brandon and I, neither of us have met, and he has messaged us many times over the years, and he's listened to us now for, I think, since we started. He's been a listener, and
Do you
it's
know where he's
crazy.
from?
I don't, but we ought to go
Okay.
visit him.
We need to. Yeah.
He's our longest
Yeah.
listener. Thank you, Mike. Thank you for listening. We appreciate it. But yeah. All right. All right. Before we get into final thought, earnings this week. You ready, Brandon?
Right. Right. Yeah.
All right. Earnings. On Tuesday, we have Delta. It is the first major airline of the quarter to report. They're going to give us how did the holiday travel season go with all the hiccups last year. There was a lot of hiccups last year. What are we looking for going into this year? It's going to let us know kind of where United, American, all the other ones are going to fall. Given that Boeing has a CNBC article over the last week said that Boeing's outgoing sales, or no, was it not sales? Is when they actually deliveries
Yeah.
of
Deliveries.
airplanes to airlines is the highest it's been in over 6 years. So that's good news for Boeing. But what does that mean for the airlines? Are they
I
the
think
ones receiving these?
I think Delta surprises to the upside. I
So
think
do
the
I.
stock moves higher, and if I had to bet, I would think that everybody else follows with it, but it sets the earnings bar higher for companies like United.
And I think American doesn't hit it
And
because American
right.
had too many troubles last year.
Okay.
So I think it does raise the bar. I agree with everything you just said. I do think it spells trouble for American. I don't think they're going to meet that bar.
Yep.
Uh, on Tuesday, also, you have JP Morgan reporting after the close. Now, JP Morgan, the reason why this is one to watch, it is the first of many banks this week. I'm gonna go down this list. And you're gonna hear all these banks this week. It's the first one, so that's gonna really set the tone for the rest of the week. And can the other banks follow? Because I believe J.P. Morgan's gonna head it out of the park with a home run. I don't see anything that really could have slowed them down this year.
Right.
And
Me too.
so, yeah, Tuesday afternoon, JP Morgan. And then Wednesday, Bank of America, Citigroup, Wells Fargo. Thursday, BlackRock, Goldman Sachs, Morgan Stanley. Friday, PNC, State Street. All the big banks all week long. Bank, financial news. What we're going to look at is interest rates. You're going to hear that. You're going to hear Fed interest rates. You're going to see what we're going to see, Brandon, this week as far as news.
CPI.
CPI. CPI is going to have a big effect on the banks and how
Retail
everything's going
sales.
this week.
Retail
Retail
sales is
sales is
coming.
going to come in. Is it going to come in hot? Is it not? Is retail sales going to come in up 2%, but inflation's coming in up 2%, so therefore
We'll
retail
see.
sales is flat?
We'll see. And then I want to hear what the banks have to say about interest rates, because high interest rates in a
I just said
relatively
that's all they're going
healthy
to talk about.
well, in a relatively healthy economy, that's good for banks. But if the consumers are feeling the pressure more and more and more, then that could, wind up being not so good. So let's hear what they have to say first. And
I'm interested in to see what BlackRock has to say about the current administration's plan for home ownership and the fact that they want to limit corporations owning thousands and thousands of single family homes. single
Right.
family homes specifically. And I want to see what BlackRock is. BlackRock is one of the biggest buyers of single family homes in the United States from a financial institution. And if this is going to affect their business plan,
What does this do to Open Door?
right?
Right. I want to know that because they're not as big as BlackRock. They're not a huge bank or anything like that. But, if you don't know, Open Door's a company that you can basically go online, submit your home for sale, and get almost an instantaneous offer on it. And then they come in, they make minor repairs and try to sell it for, a profit. That's what Open Door does. And their financials have been largely a mess over the past couple of years. But for some reason, retail investors over the past couple of weeks have picked up buying an Open Door.
Yep.
So I I don't agree with that. I think that's a bet in the wrong direction possibly, but we'll see where it goes.
We will see where it goes. So there's a lot of different angles to play the banks this week. The only two I'm watching this week that are not bank related is Delta, of course, on Tuesday, and then on Thursday after the bell, I'm looking at JB Hunt. And I bring this up every quarter because JB Hunt's the first one of the transportation companies that reports. And I want to see how much stuff are we moving through the country. And is it up? Is it down? Are we having trouble? Where are the rates at for these stuff?
Right.
And JP Hunt's one of the biggest when it comes to autonomous vehicles. And they've partnered with Google and Waymo on their autonomous vehicles and their trucking to see, is that even growing? Has it stalled? Or is it slowing back down? Where are we at on that? Because how much safer would the roads be if it was all autonomous vehicles on the roads and nobody was driving their own car? It would be so
Right.
much safer, right? So where are we at moving forward with that? JB Hunt's always one I watch because it's the first one and it really sets, again, we're talking about setting the tone. Why? First quarter, first week of a lot of companies reporting, first sets of big earnings coming in. First time it sets a tone for the rest of the quarter, sets a tone for January. Why is that important? January barometer, Brandon. Every January I bring this up, and every January you tell me it's all hocus pocus astrology. It is not. It's true. It works. It's over 80% correct. January barometer. I'm looking at and watching it.
I wonder, okay, so most of the time
Go
the
into your final thought after you're done
yeah, I'm
talking
going
bad.
to. So most months the S&P 500 winds up higher. January is obviously a month, so it falls into that. Most years the S&P 500 winds up higher too. So I don't know if causation and correlation are matched up here. That just because January is higher means the whole year is going to, I don't know.
Causation, no, but correlation does match up. Yes.
Well, I guess. I don't know. I'm not a palm reader, Dave. I'm
Mercury and Venus are lined up, so January is going to tell me what it is.
But final thought is that I just have, Netflix's earnings are coming up not this week, but I think next, and I just got a really good feeling about it. I think the selling pressure on Netflix has been super, super high. It's been overdone. And I think that the earnings are going to show that was overdone. And so I just got a good feeling about it. I rarely make these kind of bets, but I would bet on the Netflix going higher, at least going into earnings. And if it doesn't go much higher going into earnings, I think after earnings, we're going to have a pop. Um, we mentioned in one of our text message groups that we have, I mentioned it at least, that I was looking at Dillard stock and I was like, man, what is the deal with this? It's way outperformed all other retailers. I mean, just leaving everybody in the dust. And I wanted to research it. I did a little bit of research into it. I'm not going to say buy the stock. I think it's way too overvalued. They've done the right things. They've done very basic right things, pivoting to high margin products. That makes sense, right? Um, that and then using the stores as distribution points for online rather than trying to compete directly with Amazon. They've done the buy online, pick up in store stuff. That makes sense. That's a good thing to do. One thing that I found that was interesting in 2008, they acquired a construction company. So any store building or remodels or anything like that, they're using their own construction company. That I find interesting too. They own most of the retail space. That's good and bad, especially when you're a mall anchor and that retail space is consistently going down. They issued a $30 one-time special dividend per share. They've bought back a ton of shares in the market too, so they're doing a lot of share repurchasing, a lot of things to keep that stock price high. And I just don't see that lasting forever. When you see most apartment stores trade in like the 6 to 10% PE range, and this thing's like in the 30s right now, I'm not touching it.
Yeah, I agree. I stay away from most retail. I do remember you bringing that up, and I know your comment was like, "Who shops at Dillard's
I
anymore?"
know.
And
So over
I
the
was the
past
only
five
one who's
years,
like, I was the only one who's like, I buy a couple things from there, and
well,
everybody dogged me. You guys
it,
all dogged me.
I mean, I can't believe being, a guy that always, I wouldn't say always, but often invests in retail. I miss this right underneath my nose. I
Right?
wouldn't think that a mall anchor would do this, but over the course of the past 5 years, the stock is up 1,102.93%.
That's outright killer,
I
killer
know.
return. Go Dillard's.
But part of that is like, the manipulation of the $30 one time special dividend, the buybacks, all that. Other than that, it doesn't
Everybody
justify the
does the buybacks.
valuation. Yeah,
Everybody does buybacks.
they do, but they're doing it like to the extreme,
Gotcha.
the size of the company, and yeah. So I'm still passing on it.
Gotcha. All right. I don't have anything else to add to this. I'm just going to watch these banks. I'm, like I said, as you found out right now today, I'm sitting on a ton of cash. I'm looking for opportunities. Vista sounds like a good one for me to add to my watch list and see if I want to open a position come Monday morning. I am still doing the options. Again, you have to DM us in order to find out more about that. I don't want to spend time explaining it if nobody's interested. So there you go. All right.
All
All right.
right.
As always, we hope we've been entertaining, educational, and uplifting because we want everyone to make money. Have a good night.
Have a good night.